Okay, so the second question is calculate current ratio from the following information. Certain items have been given to us, for example, total assets. That's 10 lakh given, fixed tangible assets is 5 lakh given, shareholders fund is 6 lakh 40. Okay, non-current liabilities, these are liabilities that are non-current. That means they are not current liabilities. So what are they? They are long-term liabilities such as loan and debentures. And then we have non-current investment. This means investments means asset, and non-current basically they are not current assets. So they are long-term assets. Okay, and they are given as 3 lakh. Alright, before we begin this up, I would like to show you a diagram I've made. Okay, so this portion, wait a minute, this portion is called capital employed, and capital employed consists of equity share capital, reserve and surplus. Reserve and surplus is basically a certain amount that has been kept away from the profit that the company makes so as to make further development or improvement in the company. And then we have the fictitious asset that is subtracted from any kind of, that is, it's capital amount, equity share capital that's given or collected from the equity shareholders. And reserve and surplus, any kind of fictitious asset, for example, advertisement fees, for example, or like payment is subtracted. Preference shareholders, money collected from the preference shareholders. So this is all the capital has been collected. Fine. And then we have loan and debenture. This is obviously a debt, long-term loan and the long-term liabilities. Then we have current liabilities as well. And when we add all of these, we have total assets. And this total assets is given to us in the question. It's 10 lakh. And under this, fixed tangible assets also called. Fixed tangible assets are assets that we can touch and feel and see. For example, like machinery, we can see it, land and building, etc. Shareholders fund, I just show you the diagram. In this part, shareholders fund would be the money collected from the equity shareholders, the reserve and surplus that's kept in the business, and kind of fictitious asset would be subtracted, and a preference share capital as well, collected from the preference shareholders. Okay, yes. And then, so how are we doing this sum? In this sum, we have to calculate the current ratio, that is again CA by CL. So for the CA, we already have the total assets. That is, we have the total assets as well. But let's see what is given to us as current liability, long-term loan and debenture. What is given to us? Let's see. Okay, we have total assets given to us, current assets, fixed tangible assets will be subtracted because fixed don't mean a thing, they're fixed, and we are searching for current assets. So from total assets, the whole of the assets that's given to us, we're only taking the current assets. The current part is fixed. Any kind of fixed assets would be subtracted from the whole of it, and from the whole, we are also subtracting the non-current investments. These are investments that are fixed investments, that are like long-term investment. So how can we take them in current assets? The formula, according to what is given to us, total assets minus any kind of fixed asset, and then again minus any kind of investment that is not current. So then we'll have the current asset. The idea is to find the current asset from the whole of the total assets. The total is given. From that, we need only the current part. So any kind of fixed assets will be subtracted, and any kind of long-term investment will be subtracted. And investments are assets. Next, we have current liabilities. And for this, again, we have the total assets. I'll just show you the diagram. Under the total assets, current liabilities is also a part of this whole group. Current liability also falls under total assets. So total assets, if we want just the current liabilities, we'll see what is given to us. Shareholders fund is not a current liability. We can just separate the amount, separate the actual title. There's the current liability. So shareholder fund, we're subtracting this part away to find the CL, and any kind of non-current investment is also subtracted. I think I've written this wrong. There should be not any kind of non-current liabilities because investments are assets and cannot fall under this current liabilities if you're searching for current liabilities. Okay, so from the total of assets, we're subtracting this shareholders fund and any kind of liability that is not current. And then we'll have our current liabilities. And we're going to put them in the ratio, the CA by CA, and we'll have, this is the ideal ratio.